Today, we're going to talk about the top 5 investing tips to combat inflation for 2022. If you don't learn how to invest the right way today, your hard-earned money is going to keep losing value each and every day. We all know that inflation is at all-time highs. The official announcement was above 6%, but we know that the measurement of inflation actually lags. And in a lot of areas, people saw increase in housing costs by 10 to 30% or more. Vehicles are up by a lot as well, as long as a lot of goods and services. And that's why I compiled these top 5 investing tips so you can learn what you need to know to keep your hard-earned money and outpace inflation. If you're new to the channel, I'm Ariane and I retired with investment income at the age of 27, and I made this channel to help good people like you learn how to actually build true wealth and financial freedom. Now, here are my top 5 investing tips for 2022. Tip number 1, unlock lazy money and invest. With all-time low interest rates, now is the time to unlock some lazy equity and lazy money and put it to work. All we mean by lazy money is money that's not already working for you right now, that's not generating as much of a return as it can get for you. Now, here are some of the ways you can unlock lazy money. Number 1 is you can get a line of credit on your primary home. Or you can also get a cash out refinance on your primary home or any other rental properties you own. You can also look at some underperforming assets that you have. Maybe you have money just sitting in a bank account or a CD, or maybe you own some stocks or crypto that's not performing as well as you'd like, and you just want to shift it into other cash flowing assets. You might want to consider selling those underperforming assets and invest them into other better performing assets. Interest rates are at an all-time low, and with inflation as high as 6% and interest rates as low as 2, 3, or 4%, you can see the math, right? It's better if you actually get a loan and invest in something that got you a higher than 6% return so you can combat inflation even better. The more you let your equity just sit there and not do anything, the worse off you'll be financially. Think about this. If other people are doing what we're talking about right now and they're unlocking their lazy money to invest and now have more money and you aren't, what does that do to your buying power, right? They're going to have more money than you. So if both of you wanted to buy this house, well, guess who can pay more? Them, right? So if you don't learn how to do this and unlock your lazy money, chances are your buying power won't be as good as it could be. Tip number 2, invest in stable cash flowing assets more. I come across a lot of people who are very nervous about what I tell them in tip number 1, which is getting loans to invest. The main reason they're nervous is because they typically don't have investments that are stable and safe, right? The main way to not have to be nervous is by finding investments that are stable and safe cash flowing assets, right? I like cash flowing assets because when you own something like that, so the cash flowing asset we like owning is real estate, right? When I own real estate, it's going to produce cash flow regularly each and every month and each and every quarter, even when the market goes down, right? Even in the down market, we can still count on the cash flow. Everyone will always need a place to live. So it is one of the safest and most stable investments out there. And it did well even through the craziness that we had in 2020. I'll tell you more about what happened there later, but this is something worth exploring. I actually have several other videos on how you can invest in real estate. I have a series where I talk about how to invest 1,000, 10,000, and 100,000. I'll put that up here and put the links in the description below as well. Tip number 3, keep a safety net with 3 to 6 months or more of cash or cash-like reserves. Like I mentioned earlier, during 2020, we owned over 2,000 rental properties. And yes, there was a period of time where some of the people had issues, right? Like maybe they lost their jobs or they were just scared about what was happening and they didn't pay on time. So there was a time where our cash flow was delayed. But because we had over 6 months of cash reserves, not just for our personal expenses, but for all of our rentals and all of our businesses, we didn't have to worry. After a month, we worked out the issues, we worked with the tenants, and we made sure that, if they needed payment plans, we worked with them. Some of them needed government assistance, we worked with them as well. And after a month or two, we worked out all those issues and we were able to replenish the money that we took from our safety net, right? So that's something you need to keep in mind, that even in the craziest of times, like in 2020, if you have a safety net, you can weather those black swan events that happen. Right? So you want to make sure you do that. Keep 3 to 6 months in reserves in case there are any emergencies you need to take care of, and you'll be able to weather most of the storms, especially if you invest in cash flowing assets, because that's the worst case, right? When you have a cash flowing asset, it's just going to be slightly delayed in the worst case and it'll resume later, right? And then after it resumes, then you can top up the money that you took from your safety net up to that 6 month reserve mark, or however long you want your safety net to last, and then you're good. Our personal safety net is actually over 1 to over 2 years worth, because my husband likes being extra safe. So there you go. You can have more if you just want to be super, super, super safe. Tip number 4. If you haven't already, talk to a mortgage lender or a mortgage broker and see what kind of investment loan options you have, or even some hybrid investment loan options. So I'm going to give you guys an example. A lot of people don't know that a second home loan here in the US exists. And what that means is you can buy a second home with as little as 10% down. Now, that is a lot less than a 20 to 25% down loan that you usually need 20 to 25% when you buy an investment property. But because of this special type of loan, it's called a second home loan, you can buy an investment property for a lot lower down payment. And the cool thing is with a second home, you actually, it's your second home, right? So you're supposed to use it for 14 days out of the year, right? So that's 14 days of a free vacation for you and your family and your friends. And the rest of the time, you can rent it out. You can hire a short-term rental property manager to rent out your second home on Airbnb, VRBO, all of those other services, right? And you can cash flow and still have a place to stay for 14 days for free, and you get a free vacation, right? So that is pretty cool. We actually have one of those. We have a second home and we use the second home loan, but a lot of people don't even know about that. So that's my tip number 4, right? Talk to a mortgage broker. If you don't know a mortgage broker, ask one of your real estate investor friends, right? If you don't have a real estate investor friend, join our Facebook group. It's called Faster Financial Freedom. It's a free Facebook community, and you can just ask, like, hey, does anyone have a mortgage broker that they can recommend in my area, right? And we have over 1,000 people in that group that are super helpful, and they'll likely be able to connect you with someone in your area that does loans in your area. So yeah, once you connect with them, you can ask them what different types of loans there are available to you for investment properties, for personal properties like that second home, and you might find something that you can use and you can leverage. One of the beautiful things about real estate is that you can use leverage, right? Like the banks will loan you a lot of money to buy real estate, and that makes your returns even better. You can use our free rental calculator up here, and I'll put it down in the description below. You can use that to see how much cash flow you could get if you buy a second home. Also use airdna.co, and you'll be able to see what houses around the area or properties around the area are renting for, or on Airbnb on an annual basis. It'll show you, let's say you put in 3 bed, 2 bath in this with this address, it'll show you that, oh, like normally houses here are getting $50,000 a year. So you can use that number and do your preliminary analysis on that rental property using our rental calculator. Now, obviously, you're going to do more digging than this, right? You're going to talk to property management companies and ask them what their projections are. So there's a little bit more of a process that goes into that, but that's the first step you do in analyzing rental property. And you can learn more about that rental property analysis process in the video up here and down in the description below. Tip number 5, learn more about how the wealthy use their money. So like I mentioned earlier, that with inflation at all-time highs right now, it's extremely important that you learn how to invest, because each day your money is going to be worth less and less if you don't. And you already learned a few things here in this video, like using low interest debt and investing in cash flowing assets and keeping a safety net. The truly wealthy people do all of those things. But there's more things you need to learn, such as how the common financial advice, that's not what the wealthy people are doing, but that's the advice that you get. And that advice is actually hurting you. One of the advice is that you should pay off your house early. And actually I just made a video on how paying off your house early can cost you over $500,000. Like, it's crazy, right? Like, you would think that that advice wouldn't hurt a lot, but when I actually did the math, it was like, for a normal 350K house, a normal person who was paying off their house an extra $500 a month ended up with $500,000 less than their other counterpart who didn't put an extra $500 a month in their mortgage. Crazy, right? How would you like an extra 500K? I know all of us would. So you want to learn what the wealthy do and what they don't do. Take the time and invest in yourself. You're already doing it because you're watching this video right now, but take some more time, right? Watch all those other videos I recommended and make sure you learn how to invest the right way. Don't get distracted by all the get-rich-quick type of investments around. And look, there's a lot of them right now, right? It's just they're higher risk with potentially higher reward. Like, I'm in a lot of them too. Like, I have some higher risk, higher reward crypto investments. But you only want to invest what you can afford to lose in those, which I recommend would be maximum 10% of your net worth to start. Now, if it grows past that, fine, keep it there. But like the money you put in that you worked hard for, only put at the most 10% of that in there. And the rest, you want to put those in stable cash flowing assets. Because like we talked about earlier, real estate is one of the most stable cash flowing assets. It's pretty safe, pretty stable, pretty, you can count on it, right? Coming in every month or every quarter. And that's what I would do personally. That's what I still do personally. And that's what I recommend you looking into. So those are my top 5 investing tips for 2022. Hopefully they were helpful. Check out my other videos about investing. I'll put a playlist up here and in the description. And if you like this video, please click the like button and subscribe and click that notification bell too. It helps me out a lot with the YouTube algorithm. Also join our free Facebook community. It's called Faster Financial Freedom, where you can learn and network with others who also love talking about investing and creating financial freedom. I'll put a link to that group down below. And for people who already have a good size savings or investment portfolio, we have an advanced application only program called Wealth Accelerator. And those are for people who have a portfolio, right? Who want to retire with investment income in 1 to 3 years and want personalized one-on-one coaching or consulting. Go to wealthgym.com to learn more about that. And I'll post a link below as well. Thank you so much for hanging out with me, guys. Have an amazing new year, and I will see you at the next video.